What's up guys, I'm bringing you one of the most requested videos that a lot of you have been asking me, comments after comments. How does tax work as a Forex day trader? Before I get into this video, the disclaimer is that I'm not an accountant. I do not have the license nor the studies to be able to do this for you or give the advice in terms of how it's exactly done. I don't do it myself. I have a tax guy that I'm in contact with, my own accountant that is dealing with my tax, dealing with my company's income, but he was able to send through a brief description of exactly how it works. So in this video, I'm going to explain to you exactly how my company is working, how the tax works for myself, and how I'm pulling profits and not paying this capital gains tax, which is what we're going to get into. So for starters, how does tax work as a day trader? A few things that we need to actually take a look at is there's two different types of capital gains, right? There's a short-term capital gains and a long-term capital gains. Now, this video can also definitely help you if you are an investor yourself, as well as if you are just a normal Forex day-to-day trader, right? So short-term capital gains. In South Africa, it is not a separate tax. It's part of income tax. You must include taxable capital gains in your income, and they are taxed at margin income tax rates. For individuals, it's 40% of net capital gains is included in taxable income. Only 40% of the gains is taxed as a person's normal rates. For company trusts, this includes a rate is higher for companies at 80%. Individuals and certain trusts have an exclusion of 40,000 rands of capital gains per year, with the first 40,000 of net gains is ignored, meaning that your first 40,000 rand that you're earning, whether it be trading, investing, or selling goods, or whatever extra income that you're earning, you have 40,000 rand that you can earn without having to pay actually tax on it. Okay, so that's the one part, and I'm going to get into this video exactly how we can bring down this 40% net capital gains tax, as it's a very big amount. I mean, if you're making 100 grand, 40,000 rand goes straight to the government, or the tax collector. But now if we look in terms of long-term gains, in SA, capital gains are taxed the same way regardless of how long you held the asset for. Whether you shares for 1 week or 5 years, the tax treatment is identical. It goes through capital gains tax with a 40% inclusion rate. Although, very big although, SARS looks at behavior of trading. SARS look at intention of behavior. If you're trading frequently, intend to make short-term profit, not long-term hold, you will be taxed 40% gains. But if you hold long-term and withdrawing bits at a time, you can be under the 40K mark and get even taxed at 18% on those gains, right? So that's very, very important to understand. If you do not have a company, and I'm going to get into it later on, you are still going to be taxed 40% as it's capital gains tax, right? And as traders, I know a lot of people are sitting here withdrawing profits and not really worrying about tax, but as myself and where I was in my current position, it was very, very important to keep my books, to keep my tax in order. Otherwise, you can get nailed with a massive, massive fine, right? So basically in long term, what it's talking about in long term is that if you are having long-term assets, whether it be stocks, cryptos, whatever the case may be, and you're withdrawing bits by bits underneath the 40K mark, you won't get taxed. If you do over the 40K mark, that you can get taxed less than 40% and actually at 18%, depending on what you are withdrawing. So again, I'm not an accountant. You will have to speak to the accountant exactly how the percentage work, but there's a quick solution to this that can pay you a lot less tax, and that it actually solves the whole issue, right? One thing we need to understand is how to actually change that 40% into 18% or less legally. That's very, very important, right? We need to change the phrase from capital gain to revenue, okay? Something that's very, very important to understand. The solution to all of this is registering a company. Now, whichever country you registered a company, just find the person. This is the people that I used to register my company. It is in SA, and you can go to CIPC. It's a place where you can register a private company. I did a short little explanation here for you. But before I get into that, there is a way that you can set up beforehand. Now, the way that I've set up my company is that my trust owns my company 100% shares, and I'm an individual owner of the trust, so that I can pay myself dividends yearly at no tax at all. Okay, so that's how I've set up my company. But before I get into that, I'm just going to go over actually exactly how to register a company in SA with CIPC. So you can obviously go to the website. All you're going to need to do is you're going to go is enterprise registration. You're going to click on register a private company with standard MOI. You're going to read through this, very, very important, and you're going to click register now. Okay, one thing that you definitely need, this is the requirements if you do not understand how to get it done. Requirements to register a private company with CIPC. Company name, optional but definitely recommended. Obviously you want a name. If you have a trading name or trading company that you want to, have dreamt about, name it that. It's a cool way to make your trading not just a flip and dip, but actually a bit more, make it more real. Having a name to your company is always a great way. I remember when I first registered my company, it became a lot more real instead of just withdrawing profits into my bank account. Now I'm withdrawing into my business. But anyways, you'll need 3 name options in case your first choice is taken. Director's details. You must have at least one director. Can be you alone. For each director, you'll need a full name, surname, ID, contact details, resident address. Proof of usually does not require registration, but good to have. Always good to have. I'd rather always give everything you possibly can have other than less, because it's just going to help you in the long run. Registered address and postal address for your company. So it needs to have an address. This can be your same address if you're a trader and you're working from home, or you're still living at your house. Use your business address as your home address. That's what I did basically. Must be a real location. Postal address can be a box if you have one, or use as physical, right? MOI, Memorandum of Incorporation. CIPC will give you a standard form of COR 15.1A. MOI if you choose the default private company setup. If you want a custom MOI, you'll need to prepare it separately, usually only needed for complex shareholding agreements. So basically that means if you are looking for multiple shareholders in your trading company, you're gonna have to go a different route. I'm just explaining the standard basic registering a private company, registering it under one owner, which will be yourself, and that you have 100% of the shares. Payment registration fees is usually 125 Rand. See, 125 Rand is not a lot of money, to register a company without name reservations, or 175 with name. So 175 Rand to register a company, that's going to save you a lot more money than you think. And we're going to get into that a bit now. CIPC account, you'll need to create a free CIPC customer account on the website, which is pretty basic. You'll load funds into your account to pay for the registration. Simple and easy. Supporting documents. Once you apply, you'll need to upload signed supporting documents. So you'll get documents from CIPC that you'll need to sign. Have someone look over them as well. Don't just sign it. Make sure you take a look at it, because it's important before you just sign anything. You'll get a core 14.1 company registration form, MOI, and certified ID copies of all directors. This is what you'll need to submit as well. So obviously your ID, passport, upload everything, so to be double sure. So that's very, very important to upload. After you register, right, once your company is registered, you will receive a 14.3 certificate of incorporation, basically saying your company has now been registered. What you will need to do is, you have a company number, but you need to go open up a business bank account, register for tax, SARS, and if needed, VAT payee later. So if you are a normal day trader and investor and just putting profits to avoid or pay less tax, you will not need VAT unless you are selling certain services, etc., right? Business bank account. Okay, you can go to any bank that any bank that you want. So what you'll need once you go to the bank is obviously just go to them and say, hey, look, I want to open up a business bank account. What you will need to bring is these documents that you just signed. You need signed copies. And then as well as that, you will need to have your proof of identification, ID, as well as just for in case, bring a passport as well. Okay, so that's very, very important. But then, well done, your company is registered. Very simple process, easy to get done. If you want to go read exactly how to get, if you have any questions regarding CIPC, I don't know all the answers, just go check them out and do some research there. Okay, now, before I get into the rest of the steps, I just wanted to explain my structure that I currently have set up. So steps to put your company underneath your trust. So there are benefits, there are cons and pros to having your company underneath the trust. But let me explain exactly how it would work. It's a much longer process. It's not as simple as and easy. You first need to register trust with the Master of a High Court. This requires trust deed, founding documents, trustees, initial funding, and lodgement fee. Okay, once approved, you'll receive a letter of authority. Transfer shares of your company to the trust. So basically 100% shares need to go to the trust. Draft a share transfer agreements. Company security register, submit and updated a Core 39 notice of change and company details. And then to CIPC, showing the trust as the shareholder. There may be donation tax implications if you donate the shares to the trust, 20% of donations over 100K in a year. Many people sell their shares to the trust on a loan account instead of donating it. This avoids donation tax, as again, when you are putting your company underneath the trust, there are obviously what they're explaining here. If you're doing this at a later stage, your company is obviously worth something. So when your company is being sold to a shareholder or the trust, the shares become a bit of value and you'll need to pay tax on that. So it's not just simply putting your company underneath a trust. So if you are going to do the trust company and then you the owner of the trust, then you need to do it before you actually get your company up and running and putting profits into there, if I could put it like that. Update resolution and records. Have the trustee sign a resolution acknowledgement and the purchase donation of shares. Keep all records of SARS in compliance. Ongoing admin. The trust must submit annual financial statements, submit tax returns, keep minutes of trust meetings. Okay, so every meeting that you do have in terms of partnerships or whatever the case may be, because it is now underneath the trust. Again, as I was saying, if your company is underneath the trust, it takes a lot more admin fees. It just takes a lot more, okay? But it's definitely worth it in the long run when you can pay yourself dividends. The cash flow is a little bit better, but it's not major difference in terms of what you're actually generating in terms of tax, etc. Why people do this: asset protection. So these are the benefits. Your company is no longer in your personal estate. Creditors can't touch it if you get sued. That is one of the big benefits. So if your car's underneath your company and it's under the trust, correct me if I'm wrong, but creditors cannot attack your assets underneath your company because it belongs to your trust and not yourself. So unless obviously your company does something wrong and it's not paying, whatever the case may be. Okay, so tax flexibility. Profits can be distributed to beneficiaries with lower tax rates, reducing overall tax liability. So that was another benefit. So you're going to pay a lot less tax because you can pay dividends from your company to your trust, and your trust pays dividends to the owners, which would be obviously yourself. So the tax is a lot less than what you would normally have if your company is just registered normally and it doesn't be owned by if it's not owned by a trust. Important to note, this is not a DIY job. A poorly drafted trust deed or incorrect share transfer can trigger unnecessary tax, donation tax, or even SARS to discard the structure. It's worth using a professional attorney, accountant, because again, this is now beyond my pay grade, and you need to have someone that's legally able to do this and set it up correctly. Otherwise, you are going to stuff yourself in the long run. So just be very careful of that. That's kind of the system that I've going, if we could put it in a diagram just so you can understand. Company owned by your trust, you the founder, okay, creates a fund trust, family trust, shareholder, and the company owns 100% of the shares. There are cons, as I was saying, to owning the trust, your company as a trust, and you're doing an investor or trading business, okay? So the one would be, again, it's just a lot more admin fees, it's a lot more admin that you have to get done, etc. But the next con would be when registering a company or registering a business account within a broker, they do not allow it because your company is owned by a trust. And yes, if you're the sole owner, you would think, okay, that's perfectly fine, but you need to keep in mind that with a trust, you can change shareholders of the trust quite quickly. You can give 50% to your mother, father, whatever the case would be, with a simple document. So brokers 10 to 1 want to stay away from this. So there's another system that I use in terms of, if you want to go this way, I'll see the comments. If this is something that you want to get more info on, I will do a part 2 on this, on how to actually have your company be owned by a trust and still open up an account with a broker underneath your business name. It's a bit of a procedure, but if I get enough likes and comments on this video, I'll definitely do it too, okay? So next thing, why do we need a company and what is the benefits? Okay, so obviously the first one would be tax, avoiding capital gains tax. So point 1, okay, why you might use a company for trading: avoiding capital gains tax by using company revenue rules. As I said, we're shifting the phrase from capital gains tax to revenue for the company. If you trade as an individual investor, SARS may see your trades as capital gains. Good if you held long-term, max 18% effective tax. But if they classify you as a trader, you're taxed 100% of the profits as an income up to 45% personal rate. Okay, so that's if you are trading individually, you don't have a company. So beware if you are still trading for 2-3 years and you are profitable and you are not declaring your profits. SARS, if they do find you, you can get knocked quite a bit. But using a company, all profits are automatically company revenue, taxed the flat corporate tax rate of 27% as of 2025. Again, always have an accountant look at this because it can be a lot less, it can be a lot more, depending on your threshold and what you're earning. And I do have a diagram for that now. This is usually lower than the top of personal tax bracket, which is 45%. You won't have capital gain headaches. Everything is just revenue, which is so much easier to obviously work with, right? Point 2, tax planning and flexibility. You can choose when and how to extract profits, salary, dividends, director fees. You can leave profits in your company to grow your trading account. Tax once at 27%. No extra tax until you pay yourself. Okay, so that's a beautiful thing. When you are withdrawing your profits from your broker accounts or from funded accounts, you are still getting taxed 45% no matter when you withdraw bit by bit. But with the business account, again, and I'm going to get into how the expenses work, how you can, make the company make zero profits. Before I get into that, you can withdraw whenever you want and you can withdraw it at certain times as well as certain amounts. You don't have to withdraw everything. You can do it bit by bit. Remember, it is a good way to do that as well. Point 3, and I'm going to get into the reason why it's good to not just pull all your profits straight away. You can plan ahead, which is basically what it means, tax planning and flexibility. So you want to be able to plan your tax, plan your profits, etc., so that you know what you are going to be taxed on, what you're actually receiving. Okay, point 3, tax deductible expenses. You can deduct many legitimate business expenses to reduce taxable profits. So what was I saying? You can do write-offs. You can write off a lot of things. For example, trading software and platforms, MetaTrader 5, TradingView. These things are come at cost. TradingView, if you're paying for a platform, that's 300 Rand off your profits that are now expenses within the company, and that does not get taxed. Remember, all expenses of the business is not taxed. It's only profit that is taxed. And I'm going to get into that now as well. Internet bills, phone bills, office setup, desk, monitors, chairs, laptops, professional fees, education, travel, even part of your home office. If you're working from home, you can even write off your rent. You can write off your expenses, your electricity. You can write off water. You can write off a lot of things if you are working from home, which is a great way, because then if you are paying a salary, if you're getting a salary from your business or you're getting a salary from the company that you're working for, you can 10 to 1 start actually writing off all that tax as well of your rent, your car, your petrol, your travel, everything. It's quite an amazing thing. So yeah, having a business, you can write off a lot, and I'm going to explain exactly what it would look like in terms of writing off expenses and what your profit would look like and how the tax would actually work. Point 4, risk and liability protection. Your company takes on legal risk, not you personally. If something goes wrong, creditor lawsuit, your personal assets are protected unless you sign a personal securities. Okay, so that's point 4. Point 5, personal image. Having a registered company gives you better access to funding, banks and investors. So I'm going to explain when you are looking to get a loan or go to a bank like Investec or etc. from these banks, you need to have 2 to 3 years of statements of money actually coming into the bank account. It can't be like, okay, register a company, I want to get a loan. No, any person or any bank that you need to deal with, they need to have some evidence that you are making money within the business bank account, but once you get to that stage, banks and investors, it's an amazing way to get funding, and ability to partner with others more formally, which is really, really cool. So to put it in table form, right? So let's say you had to make R1 million in the year. Now, again, this is excluding expenses. R1 million, you would be taxed 450,000 Rand if you're trading as an individual. But if you're trading as a company, you have 270,000 Rand tax. You basically saved yourself 180,000 Rand, which is a lot of money, okay? Again, this is before expenses are even taken into consideration. This is just clean profit coming into your bank account. No expenses are coming off. You're not using the money. You would just be taxed 270,000 Rand as a business, okay? So that's is something that we're going to work on now. But tax isn't avoidable, but how can we pay less tax? How can we pay less to the taxman, but legally? Again, I want to do another disclaimer that this is from my accountant that I'm working with. He just gave a brief description, but as you guys have requested this video so many times, how it actually works, and this is how I know it worked and how it's working for me at the moment. But first we need to know how a company would work, how the pulling the profits into the company, etc., would work. So business income example, let's say you make 25,000 Rand a month, your profits and your expenses. Profits is 25,000 Rand, your expenses are laptop, Wi-Fi, travel, salaries, business expenses, data, airtime, car, water, electricity. Okay, now we've got to break it down. So from that profit that you just received from your trading account, you're writing off your laptop, 500 bucks a month, Wi-Fi, 1,000 Rand a month, phone, 650 Rand a month, travel, 3,000 Rand, your petrol or any other travel expenses, going flights here and there, you can write that off. Business dinners, 1,000 Rand, meaning you taking your business card and you're spending money on a dinner, which you're able to do. It's called business dinners or business expenses. Data and airtime, 250, car, 3,200 Rand, water, electricity, 1,000 Rand, salaries, 2,000 Rand, an accountant. Okay, so 2,000 Rand is going to your accountant. Again, as I said, it's always good to have someone that is legally able to maintain this thing, but you guys asked exactly how it's working. So I have someone that is doing this all for me already. So I pay my accountant guy 2,000 Rand. He sorts out all my business expenses and whatnot. He does the accounting side of it. So, and then you're sending yourself a salary of 12,400 Rand. Company tax, 18%, an average of 18%. But you have zero profit in the company. So 0 times 18 is 0. So your company pays 0 tax. Okay. This obviously differs if you're, making 45 grand and you are, paying yourself, it's only come to 25,000 Rand, then you're still going to pay the 20K and a bit of 18% tax on that, which is not the end of the world. Okay. So that's why I say coming back to point 3.2, tax planning and flexibility. Plan your profits. You don't need to withdraw 40K sitting in your bank if your expenses are 25K. You don't need to have that other 20K in there. Withdraw it and then spend it as it comes in if it comes down to that. Let's say you have to do something for business. You're going on a business vacation, business expense, withdraw it when you need it. And then salary. So obviously this is your salary now. Now in terms of your tax brackets, if you're earning a certain above the tax bracket, again, correct me if I'm wrong, this is just off the Google, what it currently sitting at. So 18% if you're earning 237,000 Rand a year, etc., you can do through the percentage. So let's say if you had to do the math, you would be in the tax bracket of 18% if you're paying yourself 12,400 Rand a month. Okay, so if we go here, 12,000 Rand profit from your company. So again, you are paying yourself a salary from your company into your personal bank account. You will still get taxed 18%, which is 2,232 Rand, which to be honest is not the end of the world. You saved yourself, if you had to be taxed on the full 25K at business expense, it would be 4,500 Rand at business tax rate. Right, if you had to get taxed on, if you had to get taxed at individual, you'll be paying 11,250 Rand. Okay, so you saved yourself a lot of money just by simply registering a company and paying yourself a profit. That's for sure. So again, you're going to be taxed 18%. That is the original, because you're an employee to your company, and you are paying 18% tax, so you'd be 2,232 Rand. You saved yourself 2,268 Rand, which is a lot of money. Okay, so that's how the system is working. Okay, that's how my system is working. It's a simple breakdown. If you want me to go more in depth, I'll definitely do a part 2. But you guys have requested this video so much, so I just thought, let me get it and do it. It's a great way for you guys to learn something too. As you can see, there's a lot of benefits to having a business registered. It's cheap to register as well. You can literally name it your dream name as a trading company. You can do tax write-offs. You can pay yourself a salary. You can plan your salaries. You can plan your profits. But one thing that will always remain, again, is having someone that is professionally able to do this. Find someone that's not going to charge you too much. There's a lot of people online that work from home that actually do these. So I got a guy that works from home. He owns his own company, which is actually doing tax for companies, tax and accounting for companies. So he does it for me. But find someone that you know, anyone that is professional in this area. Pay them a fee. It's worth paying 2,000 Rand because, as I said, if you don't submit your docs, if you don't have your financial statements in order or your reports in order, you can get taxed quite heavily. That's why it's important not to just register a company, but to have someone that is doing the tax for you as well. Very, very important. So hope you guys enjoyed the video. Make sure to like, subscribe, and turn the notification bell on. Again, I'm the only one doing this. I'm putting as much value out there as possible, being real, spreading the love, spreading the knowledge. And yeah, I would appreciate if you could just share this out to anyone that doesn't understand how to deal with tax or have had that question on their mind for a very, very long time. So hope you guys enjoyed.